The Silver Surge of 2026, a comprehensive guide to iShares Silver Trust, SLV. As of January 2026, the iShares Silver Trust, ticker SLV, has become the centerpiece of one of the most aggressive commodity rallies in modern history. After a staggering 147% return in 2025, silver has entered 2026 with a momentum that has caught even veteran Wall Street analysts by surprise. For an investor today, SLV is the most liquid and accessible way to play this silver squeeze. However, because silver acts as both a precious metal and a critical industrial material, its price dynamics are far more complex than gold. This guide explores the mechanics of the SLV trust, the industrial drivers behind the $100 price targets, and the significant risks of buying into a red-hot market. 1. What is SLV? The mechanics of the trust. Before investing, it is vital to understand that SLV is not a standard company or a mutual fund. It is a Grantor Trust. How it works. Physical backing. SLV's sole purpose is to hold physical silver bullion. When you buy a share of SLV, you are essentially buying a fractional interest in a massive pile of silver bars locked in secure vaults, primarily in London. Tracking the spot price. The fund is designed to mirror the LBMA Silver Price. If the price of an ounce of silver goes up 5%, your SLV shares should, in theory, go up by roughly the same amount. The convenience factor. Owning physical silver coins or bars at home involve high premiums, markups by dealers, insurance costs, and the physical risk of theft. SLV eliminates these hurdles, allowing you to buy and sell silver with the click of a button in your brokerage account. 2. The 2026 catalyst. Why silver is rocketing. In January 2026, silver is no longer just poor man's gold. It has emerged as a high-tech strategic asset. The industrial bottleneck. Roughly 50% of global silver demand now comes from industrial use. In 2026, 3 sectors are competing for a limited supply. The AI infrastructure build-out, massive data centers required for generative AI, use silver in high-end electrical contacts in cooling systems. The solar acceleration. As nations race to meet 2030 climate goals, the production of high-efficiency N-type solar cells has doubled, and these cells require significantly more silver paste than older models. EV proliferation. Electric vehicles use nearly double the amount of silver found in internal combustion cars due to their extensive wiring and battery management systems. The supply crisis. As of early 2026, the silver market is in its 5th consecutive year of structural deficit. Mine production in Mexico and Peru has stalled due to regulatory changes and aging sites, while global demand continues to hit record highs. 3. Financial profile, performance, and costs. The financial profile of SLV in 2026 reflects a market in high-octane mode. Key statistics, January 2026. Price momentum. As of January 23, 2026, SLV is trading near $92.91, up approximately 25% year-to-date in just 3 weeks. Assets under management, AUM. The fund has swelled to over $49 billion, making it the largest silver ETF in the world. Expense ratio. The fund charges a 0.50% annual fee. For every $10,000 you invest, $50 is deducted annually to pay for the storage, insurance, and management of the silver. Liquidity. SLV is incredibly liquid, with an average daily volume often exceeding 100 million shares. This means you can enter and exit large positions without significantly moving the market price. 4. SLV versus the alternatives. Which silver is best? While SLV is the most popular, it isn't the only way to own the shiny metal in 2026. The competition. SIVR, Aberdeen Physical Silver. This is nearly identical to SLV, but often carries a lower expense ratio, 0.30%. If you are a long-term buy-and-hold investor, SIVR might save you money on fees. PSLV, Sprott Physical Silver Trust. This trust is a favorite among hard money advocates. Unlike SLV, which can settle in cash, PSLV allows for physical redemption of silver for very large shareholders and is held in the Royal Canadian Mint. Mining stocks, SIL-J. Investing in companies that dig silver out of the ground provides leverage. If silver goes up 10%, a mining stock might go up 30%. However, these companies also carry operational risks like strikes, cave-ins, and bad management. 5. Critical risks, the bear's case for 2026. With silver prices hitting multi-decade highs, the risk of a blow-off top or a violent correction is elevated. Extreme volatility. Silver is historically much more volatile than gold. It is uncommon for silver to drop 10% or 15% in a single week following a parabolic run. The gold-to-silver ratio. In early 2025, the ratio was 80-1, meaning it took 80 ounces of silver to buy 1 ounce of gold. By January 2026, the ratio has compressed to 52-1. If this ratio stops shrinking, silver could lose its relative value advantage over gold. Substitution risk. If silver stays above $100 per ounce for an extended period, industrial manufacturers will frantically look for cheaper alternatives, such as copper or aluminum, which could eventually collapse demand. Taxation. In the US, SLV is taxed as a collectible if held for more than a year, meaning a maximum long-term capital gains rate of 28%, rather than the standard 15 to 20% for stocks.
6. Investment strategy, how to build your position. The 5% rule. Most financial advisors in 2026 suggest that precious metals should make up no more than 5% to 10% of a diversified portfolio. SLV should be a satellite holding, not the core engine. Avoid chasing the green. Buying when the RSI, Relative Strength Index, is above 70, as it is for much of January 2026, is dangerous. Wait for a pullback to the 50-day moving average before starting a new position. Dollar cost averaging. Because of the volatility, it is better to buy SLV in 4 smaller installments over several months rather than putting all your money in at once. Conclusion. The essential hedge for 2026. The iShares Silver Trust, SLV, is currently the most powerful tool for investors looking to protect their wealth against currency debasement while simultaneously profiting from the green energy and AI booms. It is a unique asset that behaves like a safe haven one day and a high-growth tech stock the next. The verdict. If you believe that the global silver deficit is permanent and that industrial demand for AI and solar is just beginning, SLV is a must-watch. However, be prepared for a roller coaster ride. Silver is the devil's metal for a reason. It can make you wealthy quickly, but it requires nerves of steel to hold through the inevitable crashes.